Hi, Sagafi, Liberty Home Mortgage here, and today's topic is probably one of my favorite, actually. It's the fourth quarter prediction for what's going to happen in the market. So there's a lot of data out there, and I'm going to tell you what's going to happen in this market right now. I follow it daily. I've lived it for 23 years in the mortgage and real estate industry, dealing with interest rates, and this is what we're going to see. Let me give you 3 quick predictions, okay, of what's going to happen in the fourth quarter. Federal Reserve is going to raise the Fed funds rate in November. They're going to raise it in December. Now, that's not some like big foreshadowing of things, of news that people don't know, but I'm going to tell you this one. I'll give you a little sneak peek into the first quarter of 2023. This is the next 4 Fed meetings. Now, the Fed meetings are 2 days long, okay? The second day is when the Federal Open Markets Committee comes out with what's called their policy statement, okay? And that's when they affect interest rates. They determine what the Fed funds rate is going to do, what they're going to do with. Let me tell you what the next 4 meetings. The second day of the next 4 meetings are November 2nd, December 14th, February 1st, March 22nd, okay? This is what they're going to do. Raise, hold, drop. November 2nd, they're going to raise it 75 basis points. There's been a lot of talk in the news. As a matter of fact, just this past Friday, which was here in late October of 2022, the president of the San Francisco Federal Reserve Bank said that it's time to start talking about easing up and slowing down rate increases. When the president of one of the Federal Reserve banks in the United States says it's time to start talking, this is one of the voting members here of the FOMC, when they start saying we got to start talking about slowing it down, that's a big deal. Okay, that's a really big deal. Just within the last couple of weeks, the United Nations went to the Federal Reserve and said they have to stop raising rates, raising the Fed funds rate, because it's going to cause a global recession. So there is a ton of pressure on the Federal Reserve. So that's why I'm telling you this right now. They're going to stay strong on November 2nd. They're going to raise it 75 basis points. This will be the last 75 basis point raise we see, period. This year so far in 2022, the Fed has raised the Fed funds rate 25 basis points, 50 basis points, 75, 75, 75. 3 75s in a row. They're about to do their 4th on November 2nd. I predict that December 14th will be a 50 basis point raise. It could be 75, but the likelihood now, especially what the San Francisco Fed president said, probably 50. February 1st, I call hold. I don't think they're going to raise it at all. If they do, it'll be a 25 basis point raise at best. And then March 22nd, they're either going to drop it, or if it's 25 basis points February 2nd, it's going to be hold it in March, and then May 2nd, 3rd is the next Fed meeting, then they would drop it. I guarantee by that time, they've already dropped the Fed funds rate. If they haven't already, they're going to be dropping it then. Prediction number 2, mortgage rates are going to go up into the 8s. Mortgage rates will see the 8s. Right now, they're in the 7s. You could say 6s, depending on cost, points, fees. Fine. Mortgage rates are going to go into the 8s. That's coming, okay? But I've got some good news coming down the road on that one. Third prediction, low inventory is going to remain for housing for the rest of this year of 2022, and inventory is going to remain low for 2023. Demand is still going to stay very strong. I've been saying this for years anyways. Listen, people, this is not a spending problem. This is a supply problem. And I've seen some really people who are very, very schooled in the Wall Street numbers and in the money and the stock markets and the financials, and they've studied this for 50 years. It's a damn supply problem, people, okay? They cut the supply off. They had to at a time. They reopened things up, and then, of course, they shut the supply off again. You cannot turn an economy on and off and expect it to be fixed inside of a month or a year, okay? So the fact of the matter is it's a supply issue. It's still a supply issue, okay? It always has been a supply issue. That's why raising rates isn't going to solve the problem of inflation. It's not going to solve the problem at all, but that's probably for a different discussion. I'm starting to get a little pissed off about it, so if I start going too far down that path, I'll start going nuts. My 3 predictions right now: the Fed is going to raise rates in November. They're going to raise them in December. They're going to hold them at the February meeting, at best raise a quarter. But by the way, raising a 1/4% after you've gone 75, 75, 75, 75 and keep going that, hammering it down, even a 25 basis point raise is dropping it, okay? Second prediction, mortgage rates are going into the 8s. That's a fact. They'll be sitting in the 8s soon, but there's good news behind that one. Third prediction, inventory is going to stay low, but with strong demand, housing's not going anywhere, okay? There's not some foreclosure bubble looming. You're not going to see some high default rate or anything like that at all. Let's go to this one here. I have charts on all of this stuff, okay? So when it comes to the Fed raises, this year the Fed raise, I already said 25 basis points, 50 basis points, and then 375. They're about to come with their fourth one, okay? Let's go into wage growth, okay? This is an important chart that I have here also, is employee wages. What the Federal Reserve has done is, imagine driving a car at 100 miles an hour and you slam the brakes on, okay? You don't stop immediately. The problem is it takes time. What the Fed has done, they have not given the market time to adjust and make an analysis without punching us again in the face, okay? So the problem with that is the fact is the numbers are already pulling back. I'm not talking about the price of gas and the price of grocery. I'm not talking about that stuff. I'm talking about the data that they measure with, which quite honestly, that's a whole nother topic too by itself. But I have to use the data they give. The facts are the facts. Employee wage growth has slowed dramatically. When it comes to wage growth, it's dropped from as high as 11% growth in wages down to 8% growth in wages just over like a 4 or 5 month period. Employee wage growth is down, okay? Wages are down from what the direction they were going. They were going up extremely fast. That has slowed dramatically. Are they still going up a little bit or somewhat as fast or somewhat? Of course they are, yes, but it's slowed significantly. Let's look at unemployment. Unemployment right now, from the data they give us, is around 3.5%, okay? Next year, unemployment, I believe, is gonna start going up, but overall, unemployment will not go anywhere near what we saw back in 2007, 8, 9, 10, when unemployment got as high as almost 10% nationally, okay? We won't go anywhere near that. I predict in 2023, the worst we're gonna see unemployment go up to is probably maybe the mid fives in the worst case scenario. I think we're gonna somewhat hit the mid fours possibly, but 4s and 5s, and that is it. Unemployment will not see the 6s, so unemployment will not go dramatically high, but unemployment's flat. That's something that has to go up here over time. It's not gonna happen in the fourth quarter. You're not gonna see a massive amount of layoffs or anything like that, but unemployment is something else to keep your eye on. And this is from Fed raises affecting businesses, affecting the economy, and those have already taken place, okay? Let's look at GDP, gross domestic product. GDP was down 1.6% in the first quarter of 2022. It was down 0.6%. Here's a fact. Gross domestic product. A recession is 2 consecutive quarters of negative GDP growth, okay? We've already had that. That's a recession. They've revised the definition. This is just part of all the garbage they shovel, quite honestly. I got to stay away from that because this isn't necessarily the time for me to go over that. It's a different topic I should do on it. But the facts are the facts. GDP is in the negative. We hit a recession. That's a fact. The recession will probably go deeper, a little bit less. You'll probably hear more about it in the news. I think everyone's going to generally come to accept it when we've hit 3 or 4 quarters of negative GDP growth, because for God's sakes, they're going to say this is a bigger negative side than we saw during the Great Recession. Nowhere near the drop in property and real estate values, but by the numbers on paper for GDP, you'll see it's going to start matching that somewhat. So you're going to start hearing the words recession, early quarter 1, quarter 2 of 2023. That's coming. October, there's so much news against the Federal Reserve. Prices on homes are going to remain elevated, okay? I've done videos on this before. Watch my other videos that I talk about this. We're not in a housing recession. This is a deceleration. Home prices are not going to decline. They're going to not go up as fast. And there is a huge difference in that one. There's a big difference between people aren't going $50,000 over anymore over the list price. They're now giving asking price. One side could say, hush, but that means property values have dropped. When you're paying $50,000 more than something is listed at for sale, just because it later, the next group of people in are buying at the market value, it doesn't mean prices have dropped. It means no one's going 50 over anymore, okay? It's not going up as fast. It's a simple law of supply and demand. Low supply, steady demand, if not increasing demand, is going to continue to push prices up. So for the rest of this year in 2022 and into 2023 and through 2023, we're still going to have low inventory. We're still going to have a low supply. Prices will continue to go up. Fannie Mae about 4 months ago projected home price increases from December of 2022 to December of 2023. They projected like a 3.5% price increase. okay? I'm telling you this right now, home prices will continue to go up. Mortgage rates are about to start hitting their peak. We're gonna start peaking out because the truth is, the news on interest rates with the Federal Reserve is about to change. In the next 60 to 90 days, you're going to hear a different narrative coming out, and especially with the damn media. And you heard me say that, yes, the damn media. Because if we got rid of the media, we'd fix a lot of the problems, okay? They sensationalize the news. They take one thing that's bad, they highlight it and blow it up to scare the pants off of everybody. And don't be one of those people that swallows everything that comes puking out of your television, okay? So the facts are the facts. My prediction Q4, Fed's raising rates, mortgage rates are going up, home values are gonna stay strong, there's no foreclosure crisis happening, unemployment's gonna stay somewhat flat, it's gonna start increasing a little bit, you'll see an increase in 2023, inventory is staying low, demand staying the same, not much of a change. So there's my prediction for the remainder of 2022, and I promise you, I'll stand by everything I said, because in 60 days from now, we watch this video again, you're gonna say, man, that guy hit it right on the head with everything he said. Keep watching the videos and keep following along. Smash that like button, subscribe to my page, watch my other videos, share it on your page for others to see, and I'll catch you at the next video.